Hello, chart watchers, and welcome to Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so for 24 hours or so. If you would like to review an older program, you can find those at our YouTube channel or on Facebook. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Monday through Friday, from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we definitely would like to get your feedback. In the lower right portion of your screen, you should see a How'd We Do section with a link to a one-question survey. It's very brief, so please provide us some comments there. We'd love to get your feedback. It does impact our future shows. For those of you joining us for the first time today, welcome to the show. Once again, you picked a good day. We are glad to have you. And for our regulars, welcome back. Just a couple of quick announcements before we get started today. First, I do want to give one final shout out to Greg Schnell, who joined us yesterday. Greg gave us his insights into the energy sector, which I thought was very timely with the recent breakout in crude oil. So I think everyone enjoyed having Greg on the show. Please note he will be back with us next Thursday, and we'll take a look at P&F charts. Greg Morris will be joining us next Wednesday. Greg is one of the fellow bloggers here at StockCharts, and he's been a technical market analyst for over 40 years. He is the author of several financial analysis books, including Candlestick Charting Explained. That's a great book. Investing with the Trend, and The Complete Guide to Market Breadth Indicators. So we will have Greg on next Wednesday, and he'll give us his take on what he is seeing in the market and share with us whatever he would like. And then this Friday, Aaron will be providing everyone a look into chart patterns, why they're important, what you should be looking for, measurements, potential targets upon execution, and other little tidbits that she'll share with you, some tips there. But the big news today is we've got one of the key developers at StockCharts here, Bill Shelby, and we're starting a new segment, Everything StockCharts. So Bill will kick off this new segment. He's going to be joining us here in just a couple of seconds. But first, let me bring in my co-host. Aaron, how are you doing today?
I'm doing just great. How are you?
I am doing great. I'm kind of getting into this every day of the week kind of thing now.
Yeah, I thought it might be a little bit difficult, but I think I kind of like having the same schedule day after day. So just a comfort zone there.
Yeah, I like it more when I have weather like I'm getting today in Charlotte. It's 48 degrees and raining, so I have nothing else to do. There's no golf. I definitely don't want to play golf. I'm one of those fair weather golfers. It's got to be at least 60 degrees. So.
Oh gosh. Yeah, we're of course, Southern Cal, and we finally got rid of the, 90s and hundreds. So now we've got like perfect fall weather, highs of like 68, sunshine. Gotta love it.
Well, I wanted to make our guest feel at home with this rainy weather here in Charlotte, because I know where Bill's coming from.
Right.
How are you doing, Mr. Shelby?
All right.
You sound kind of, I don't know, maybe it might have to wake you up or something.
Cold and wet.
Is it? You got bad weather out there?
No, it was actually pretty nice yesterday, but yeah, it's been getting in the night. It's been getting down into the upper 30s, on a clear night. So it's definitely fall has left the building and winter is coming right in.
And recently you all did get snow, right?
We did just get like half an inch a couple of days last week.
Wow.
All right. Yeah, I thought it was a little bit more than that, but
a little more here, a little less there, but yes.
Well, for those of you who have joined the show today, this is going to be a pretty big day. I know, having worked with Bill over the years, he's brilliant, and as is all the team at StockCharts in that development area, and throughout the entire organization. But they do a lot of behind the scenes work, that we don't see until you just happen to push on a button and everything just works beautifully for you. But it's really folks like Bill behind the scenes that's making all this happen. And I figure, with such a grand opening and, really buttering you up here, Bill, maybe I can get that seasonality scan sometime soon. What do you think?
Yeah, I've got a separate list of features for Tom, and
well, there's a few I want too. I really want that histogram for the PMO, so you can.
Last time I looked, it was under a pack of Twinkies on my desk somewhere. I'll make sure to get to that sometime, Tom. I promise.
Yeah, it's probably somewhere under your desk. I know. I was trying to get some audio evidence, that you were going to do this and
actually work on something. Okay.
Yeah, so I guess we're going to actually fall back on what we were going to originally talk about, which is price alerts. That's pretty exciting stuff.
Yeah.
I know that a lot of folks use the price alerts or are trying to use the price alerts. So I think we have the best person at StockCharts on here today to help everybody. So why don't you just kind of walk folks through what you've done at StockCharts recently?
Okay, well, you want to go ahead and start sharing the screen and going through the whole thing?
Shouldn't I do the agenda first for everybody?
Actually, that's my bad. I was so excited about this whole thing that I was trying to jump ahead. Of course, Aaron, take the agenda and get that first market update. Absolutely.
Thank you. Okay, so like you said, market updates on the half hour. I'll be giving you your first one shortly. And as you know, Bill Shelby's here. And we have scooter movers later. We're going to show you how the StockCharts technical rank works and how to get information about it. 10 and 10 to 1. Teaser today, KLDX is going to be the first stock symbol for the 10 and 10 to 1. Go ahead and send yours in via Twitter, MKT Watchers, or through the chat box. And we brought back a segment called What Would You Do? And I just happen to know that the symbol we might be looking at is VFC. So if you wanted to go take a quick peek, I don't know. I hate for you to go anywhere and leave the show, but all right, mailbag and wrap up. If we have some time, we'll be taking some questions and wrapping up and letting you know what to expect for tomorrow. So let me go ahead and I'm going to get us all ready for our first market update. Here we go. All right, I thought I would start with our predefined alerts, our headlines, so to speak, so far this morning. And as we can see, oil set a new 2-year high. That oil's just continued higher. Cyclical sector or your consumer discretionary crossed below 50. Don't like to see the discretionary section start to suffer, but we'll have to see how far we go. Russell 2000 has crossed below 1475, and I'm going to show you that chart momentarily, but I wanted to get a look at our candle glance for you. And here we are. The Dow, most of the indexes are trading lower today, but as you can see with the larger cap indexes like the Dow and the S&P, NASDAQ, you're seeing that the lows from yesterday have not been tested yet. But look at what we've got here on the Russell 2000. We've already passed below the low from yesterday, and we're still continuing lower. Wilshire 5000 also mostly unchanged. Treasury yields up. We're currently at 23.16. UUP is trading mostly unchanged right now. We'll have to see if it can get back into the positive. Commodities just took a huge move to the upside. That was not there the last time I looked at this. And we can see probably because we got a move there on USO. You can see a flag formation here, and it looks like we're getting another flagpole. So it looks like USO is continuing higher, currently at 1150. Gold gapped up and is trading mostly sideways since gapping up. Gold doing very well, that support level holding quite tightly. And you can see the VIX is mostly unchanged and still in that complacency zone at 985. Advances are barely leading declines at this point. So let's go back to our homepage here. And I promised you I would show you very quickly the Russell 2000 chart. Notice the difference here. I'm going to show you the SPY very quickly as well. Notice the difference here. We have a broadening formation that's moving lower. We're testing that 50-day EMA. I think it's going to be very important to see that level hold. And you can see the PMO has just been moving lower and lower. So, when you look at the SPY, for example, you can see that we've got a rising trend and have continued in a rising trend. So seeing the small caps suffering a bit here could be considered a problem. And that's all I have for our first market update.
All right, sounds good. Before we bring Bill in, I do want to just share a couple of quick charts. And I'm going to focus on that Russell 2000 as well. The key there, I think, for me is that on all time frames, on the hourly chart, the daily chart, and the weekly chart, I'm coming up with very similar support. So let me go ahead and show you what I'm looking at here. Should have my chart up. And I'm going to go into my blog article first from this morning, because I already have two of the charts, two of the three I wanted to show you annotated. So let's take a look. First, this is a weekly chart on the Russell 2000. As you can see, throughout 2017, as we were putting in higher highs, the MACD had been coming down, so we had a negative divergence. And we pulled all the way back, and we hit that 50-week moving average, which is what I look for after I get a negative divergence. And the MACD didn't quite get to the zero line, but it got pretty close. And then we went on that run to the upside, and the MACD is starting to turn higher again. Now, when that happens, what I generally look for is a pullback to test that rising 20-week moving average. If we get back that far, I would expect to see that hold. And if you notice, keep this number in mind, 1451 is that level. Now, later in today's, this morning's article, I pulled up a 3-month hourly chart. And from the bottom that we saw back in mid-August through this move in early October, I applied the Fibonacci retracement tool. And the first key level, according to Fibonacci, after an uptrend like this, is to look for that 38.2% retracement level. Notice that level is at 1451. Exactly the same as the 20-week moving average. And then the last thing I wanted to show you, and I'm going to move over to a daily chart on the Russell 2000 and annotate this because I want to show you where we broke out from. Pretty interesting that the breakout came at right about 1451. So on the hourly chart, the daily chart, and the weekly chart, I'm showing support down at that level. And I agree with Aaron. I think if we fail to hold this 50, it's probably going to just set us up for at least a move down to test that level. But 3 different time frames suggested that 1450 area should hold, and that's going to be a level that I'm going to be watching. Keep in mind, too, that the Russell 2000 is the best performing index in November and December. So we've started off a little rough with the selling that we've seen, but of course it came after a huge advance throughout all of September and even back the second half of August and into the early part of October. So you got to give, you can't make this kind of a move and sustain that kind of an uptrend for very long. So I think the index has needed this to pause, kind of pull back. You can see that the RSI here was up near 90. It was up well up into the 80s. And now as it's pulling back, we've got an RSI back down in the 40s, which is much more palatable. So I actually like the action. I like the pullback and kind of unwinding some of these overbought oscillators, and at the same time getting closer and closer to key price support and moving average support on multiple time frames. So I thought that was kind of interesting. Just wanted to share that. And with that, I don't want to waste any more time. I do want to get Bill Shelby in here. Let's talk a little bit about these price alerts, Bill.
All right. Let's see. Grab my screen here. All right. Mm-hmm. Okay, so we put out this new feature, price alerts, about 3 weeks ago. And of course, people have been on the site for some time have realized we've had alerts in general for years. And it basically uses the same syntax as our advanced scan engine. And it's pretty powerful. There's tons of bells and whistles and thousands and millions of combinations of options you can do with the alerts and the scans. But often what you really need is something very simple, just a basic price alert. Microsoft crosses above 90 or whatever. And while the advanced alerts were perfectly capable of doing this, it was sort of like a steamroller to crush a walnut. So we decided to create a subset of alerts that are just for prices, and we wanted to make them very easy to use. So on our members dashboard here, we've got a couple of areas of alerts. You can see one down here in the lower right, and we've got our control center up here. We can also jump there. So if we're going to jump to the technical alert workbench, and what you'll notice now is that there's a couple of tabs here, and one is the advanced alerts. And if you go to advanced alerts, you'll see everything that you used to see. This is all of the old stuff. Nothing has changed. If you had alerts before, they'll all show up here still. But we've also got this new tab called price alerts. And then if you go to the workbench, this is what you get by default. And as you can see, it's quite a bit less UI here. You've got the same ability to be notified by email, text, or website. But if you put in a symbol, this is the only symbol Tom remembers. There we go, Starbucks. And we bring up a little chart, and so you can kind of get some context as to what the price action is. And then it's pretty simple. You just decide if you want an alert that goes above or below. When we take the current price and we put it in here. We also give the ability to do some calculations. So let's say I want to know, maybe I'm going to pyramid in, and I want to know when Starbucks goes up 2% from where it is. So I say up 2%, and I save it. So now I've got an alert that's called Starbucks crosses above 58.73. I can go in and change this if I want. The only thing I can't do is change the symbol. I can change the notification method. I can change the price or the direction. And if I resave, it will rename it. I can simply hit a new alert. If I want to do another one, I can say Microsoft. Let's see, make sure I say I want to have this and I want to put a stop on it. Maybe I can put a 5% down alert. Save that. So you can see these are extremely easy to do. And if you wanted to, you can convert this to an advanced alert. This is the old way to write that alert. But if you don't really care about learning all of this advanced syntax, we basically hide all of that behind the scenes with this user interface here. Other than that, everything is pretty much the same. You can delete and save, and you can create new. If you have advanced alerts, you can pull them up from your list. It will automatically bring up your alert in the advanced UI.
Hey, Bill.
Yes?
I got a question for you. When you were talking about that 5% down alert,
right?
Does that automatically adjust as the price goes up? Does that keep changing, or is that a fixed?
It's a one-time only. It's just when you save it. So like say, for example, I own Starbucks or Microsoft at some place, and I kind of buy it the day I buy it, I may want to put a stop alert in.
Mm-hmm.
I can go in and say, here we go. I just want to know if Microsoft goes down 5%. Maybe that's not necessarily a hard sell for me, but it's an interesting characteristic. Or you can just manually type in whatever number. But we thought some of these intervals might be interesting for people.
Mm-hmm.
You can use them, or you can just type in whichever amount you want. But it will be fixed once you type it in. So it's not a trailing alert.
Okay.
Bill, somebody was asking, if you're an extra member, do you get 10 alerts, or how does that work?
Yes. Very observant. We doubled the number of alerts people get when we introduced this feature. So extra members went from 5 to 10, pro went from 50 to 100, because we want to sort of encourage these price alerts. And I think it's a great way to sort of really keep track of what you've got going in terms of watch lists, looking to buy something, stop notices, that sort of thing. So we doubled the number of alerts that are available to people. It is still an extra or pro feature. So you'd have to be an extra or pro member to get alerts in general. And we've also created an updated, what we're calling the Alert Center. So if we go to View All, we can see there's a separate section for price alerts. And it looks similar to the old one. We've got the concept of a alert that's paused. So yesterday I created an alert for Starbucks just to show how this works. It did go above 57, and this is the time that it went off. What we've got is the latest price of Starbucks, and it's also this delta tells us how far am I away from my target price. I can also hover like over the symbol and get a chart there as well. So the delta feature will allow us to see how close we are to an alert. So that's just sort of gives you an idea of, am I way off? Am I getting close? It's just sort of something to keep you kind of aware of where all your items are. When the alert goes off, it goes into a paused state. So we don't delete it, but it doesn't continually run. If you want it to run again, you can just simply click the run button there, and we can toggle between what state we want. You can also click the delete button if you're done with it. Like I showed earlier, you can hover over the alert name and get a mini chart. We've also got the links that you see in all of our other sort of tables. You can jump to a sharp chart, to a gallery view, PNF view, or seasonality. If you have advanced alerts, they would show up here. And another thing we added was the predefined alerts, such that we show all of today's alerts in this view, which is the default. If you want to look at all of them, you can click the all button and go way, way back in time. But by default, we're just going to show you today's alerts. You can also go over here to the Twitter view and check out the Twitter view. So the idea of now is that this concept of an alert center is basically where you can go to see all of the alerts that are happening, not only yours, but the predefined alerts. So this is like what, Aaron, you were doing with the your market summary and your market overview. Is you can very quickly go on and see what are some of the major things that are happening in the market today from the alert standpoint. So all of the alerts will show up in this view, and you can go and check all of your pricing and see if something's getting close, if you want to adjust it. If you click on this link, it'll take you back here. And I'll say, for example, well, I want to change this. I don't want 79.79. I want it to be 81. I can resave that. The name changes and the value changes. So it's very easy to go in and update. Now it's at 81. All these numbers are adjusted. So it's extremely easy to go in and create these alerts. Very easy to edit them and update them. And now you've got more of them. So we're trying to allow people to really take advantage of this price alert feature. So that, in a nutshell, is the whole new feature there.
Well, we did have a question, and I have to. It's it's after my own heart. Is it possible to write a phrase to remind me why I created the alert? And I suspect what we're going to look at is the advanced.
Yeah, it's what you can do with the advanced. Is you can use comments. So anything you put after this line, whatever.
Yeah.
And you will save that, and it will always be there. But we don't have any sort of way, like in the alert center, to sort of display those sorts of things. But you can write comments into the advanced alert and save it, and every time you bring it up, it will be there. And I'll do that sometimes if there's a particular. So if we go into some of the predefined alerts, some of those are pretty complex expressions. So sometimes what I'll do is just put a comment above that says something like that, just to tell me what the big chunk of stuff is. And then down here, whatever.
Mm-hmm.
So that's one trick that I use with the comments.
There you go. Cool. Yeah, I have to do that sometimes as well.
Yes, because some of those, like I say, the advanced alerts, you can write fantastically complicated things, and of course, just the straight old price alert is probably the easiest thing that the advanced alerts can do, but they're probably also the most useful, or one of the most useful. So that's why we decided to create this whole simpler interface.
So are the alerts real time, or is it based on your subscription level?
No, they're real time. We run these about every 40 seconds, 40 or 50 seconds it takes. We load up probably 10,000 alerts every 30 seconds, and we update all the prices from our pricing feeds. And so it's pretty quick. We run through it generally under a minute.
Nice. Let's see. We're getting all these questions, and they're great. Is an alert based on closing prices or intraday as it's going along?
It's intraday. We call it the close, but during the intraday, the close updates every minute because we get a new closing every minute. So essentially, it runs from the market open till the close.
All right, perfect. Let's see. Trying to see what else we have in here.
Do these price alerts work for all stocks on all the exchanges?
Yes, all the ones we've got. Obviously, something like a mutual fund isn't going to be priced during the day.
Right.
So, but and a number of indexes, of course, are end of day only. But intraday, anything that we get an intraday price on, you can put an alert on.
Excellent.
Very cool. Now, when you do these, I mean, obviously each thing that you work on, Bill, takes a different amount of time. But when we see it on our end, it's like, oh, this is nice. Just push this button, type in the stuff. But it takes quite a while to go back and to set all this up,
Right.
to develop this. How long? Just to give somebody an idea. I mean, when you do a project like this for price alerts, how long and how many people work on something like this?
Usually Grayson and I have been doing a lot of things together on updating these UIs. We did a lot of like the member dashboard, and I'll throw out a teaser that we've got another feature we're going to try and push, hopefully.
Oh boy. Once you mention it, you have no choice. You're not going back.
No, this is a way of sort of, make it public and you can't weasel out of it, right? So we're working on another feature that we want to put on here. Grayson and I are probably the more avid traders here. So we think about trading what we'd like to see as trading tools. So we're going to be hopefully pushing something out in the next week or so. But back to your question, the pricing alerts, a lot of the back end server pieces are already in place. So we just had to put a new front end on it. That probably took us about 3 weeks or so, 3 weeks to a month. There was a lot of little details with the price alerts. So yeah, but where something like we converted all of the favorites, all of your favorite views here, to this new look and feel, this took several months.
Wow.
All right, we got a question. If you get an alert, will it continue to get you for future alerts? So once it's triggered, does it keep going, or do you have to go in and tell it to keep going?
You have to go in and tell it to keep going with the price alert. The price alert's designed it's a pretty specific sort of thing. So it's designed when it goes off, it goes like into that paused state and it will stay there. An advanced alert, you can tell it to run continuously in terms of run again tomorrow and tomorrow and tomorrow and tomorrow. And a lot of times those will be alerts for like, look at this favorites group, which is maybe all the stocks I own, and tell me if any of them go below their 200-day moving average. That's something I would want to know every day. But say Starbucks going above 61.27, maybe that's not a useful thing to know every day.
Right. What else can we find here? It looks like, let's see.
Well, I guess based on what you just said earlier, Bill, the fact that we talked about a seasonality scan means that that's in the works now.
Yes, I'm sure it is.
Well,
there are a lot of issues with putting a seasonality scan together, in particular with the data that's available to the scan engine. So that one's, sometimes some of these features look like they'd be relatively easy, but then you get into trying to, can we get access to the data in the right form? And sometimes that makes some things more complicated. So
okay,
seasonality is one of those things.
Is it possible to go back more than 20 years? Because I know that right now that's the max when we go back in seasonality.
Right, and that's one of the things is that the alert engine itself only has about 3 or 4 years worth of data in it, which means if you convert it to monthly, that's only 40 or 50 data points, which may or may not be that useful. The scan engine goes back about 12 years. So that's one of the things we'd have to do is scale up the amount of data that goes into these things. But then you've got all sorts of issues with that in terms of hardware, memory, all these sorts of issues. So that's one of the reasons that seasonality is a little bit more complicated than it might appear.
This is why I don't do any of the developer work. Because I would just be looking, I'd be like, okay, where's the button I need to push, Bill, just to do this?
Is it the red one or the green one?
Yeah. Pretty interesting stuff. We're getting a lot of positive feedback. I will say that there are a lot of folks really excited about the price alerts. So
well, it's interesting to note that in the last 3 weeks, we've got, we've been running alerts for 4 or 5 years, but the number of alerts in the last 3 weeks have gone up such that the price alerts alone now are almost 20% of the total in only 3 weeks. So We announced it in the newsletter, and of course, like you say, sometimes people you just kind of stumble across it, but we're trying to get the word out. And obviously, a whole lot more of you today will know about this. Maybe you knew about it before, but if not, you do now. And I think the more the word gets out, people will really start to use these, because they are very, very handy. I mean, I use them myself all the time.
Yeah, you just made a really good point. I hope folks out there heard you. This announcement on price alerts came through the StockCharts Chart Watchers newsletter.
Yeah,
A couple of weeks ago. And so that's just one more reason why you should be or why you should subscribe to that newsletter. It's free. Number one, you got the likes of John Murphy posting on there, and everything John does on the website, I believe, just about everything is behind the paywall. You have to be a paying member to get that. But this particular newsletter, Chart Watchers, is free. So you can also get some of John's latest thoughts, which I think is worth its weight in gold. And also you can stay up to date with these changes that are taking place at StockCharts, because I'm sure there are a lot in here who haven't really looked at the price alerts, probably weren't aware of it. But that is one area, one place where you can get the news on some of the things that are changing at StockCharts.
We definitely use the newsletter as a way to announce some of these sort of big new flashy, cool features. So yeah, I would recommend, if you're interested in you like to know sort of what's going on with the site, then the newsletter is a great way to go.
Okay. Well, I know it's about actually a little past 12:30. I do want to switch it over to Aaron and do a quick market update. Do you have time to come back with us just for a couple more minutes, Bill?
Sure.
Okay. Why don't we get to that market update, and we'll bring Bill right back in.
All right. So we will start our market update right now. Here we go. Okay, so I wanted to start actually with another headline that occurred actually yesterday, and that was a new PMO sell signal on the S&P 500. And we're seeing a lot of whipsaw here, but I just want to go show you two charts very quickly so that you can get an update on what's going on with the S&P and this PMO sell signal. So right here you can see we've had a whipsaw. We got the buy signal the day before. It whipsawed back down. I don't like that. You don't want to see that. It looks like a bear kiss, which would tell me to expect some lower prices. But right now we're in a nice, strong rising trend channel as far as the S&P is concerned. I've been following the SPY as well. And what's interesting about the SPY right now is, notice in the thumbnail, you got the close. We did get a top below the signal line, which is bad news. And I'm seeing a rising wedge here coming in, and that would indicate that we're going to get a breakdown. And typically it's the size of the wedge in the back. So that would probably bring us down to this level of support right around 254 for the SPY. So I thought that would be interesting for you for the second market update. And I'm going to turn it back over to Tom.
Okay. All right, so getting back to Bill here, I know, first of all, again, thanks for coming on here. This is, for those of you who just joined in or came in the middle of the show, this is a new segment that we're going to be visiting pretty frequently here on Market Watchers Live. It's called Everything Stock Charts. And so Bill Shelby has joined us today. We're talking a little bit about the price alerts, the new feature, or the improved feature regarding price alerts. And we'll have more of these as things change. So we'll try to keep you up to date, not only through the Chart Watchers newsletter, but also try to give you some real live demos on things that are taking place. And this is certainly a huge project, Bill, that you all just completed. Mm-hmm. And I'm going through all the comments. I've been going through the comments, and there are a lot of really positive responses that people are using these, and they really, very thankful that you made this.
It's great to get the feedback, because a lot of times I know Grayson and I put our heads together and we come up with the features that we personally think we would love, and it kind of goes out there, and then we don't really hear anything necessarily. We hear if something's wrong, but it's nice to hear that our people are enjoying it. Obviously, the numbers on these things, they just keep going up every day. I look, and there's another 30 or 40 people have created them, so it's great to see that it's getting used.
There was one comment that came in, and actually this, it's a different feature. And I know we really are trying to stay focused here on the price alerts today. But one thing, just kind of maybe put in the back of your mind, Bill. I know the question came in, can you add an extra annotate button to the top of the chart page? And I know when I do my blog articles, a lot of times I have to scroll down to hit that annotate button. And it's just,
Right.
it's just a little time saver. I don't know. Is that a big project, or is that something that is maybe something that you could think about?
Yeah, I second that.
Okay, I can pass it along. Sure. I don't know. Theoretically, it wouldn't be that difficult. I know that the charting workbench page is sort of special because if you change things, it kind of can throw people off, and they get kind of upset about that. Something like that seems relatively innocuous, but yeah, I'll pass it on to the folks that work on that.
I know we weren't supposed to do that. Asking for new things.
Okay, that was the crack in the dam, right? Here we go.
Here we go.
Yeah. I don't know if there were any other questions related to price alerts. I was trying to go through. I didn't see any. Do you have any others, Aaron?
No, I think we pretty much answered the price alerts one. And everybody loves you, Bill. And we all love StockCharts and all of the stuff that you guys do to support us in our trading and investing. That's pretty clear also in the chat box.
Yes, it's a lot of fun. So like I say, we're working to push another one out, hopefully in the next newsletter, which I think comes out not this weekend, but next weekend. So
I don't know if you address this, but I'm seeing the question multiple times about the advanced price alert. Can you include more than one security to check in there?
In an advanced one, yes. In advanced, you could choose, say, for example, a single symbol but multiple prices, what I would sort of call like a compound price alert. You can do that. You can do multiple symbols. Of course, when it goes off, you will then have to look at the mail to figure out which one triggered it, because you won't necessarily know. You'll just say that you'll get a notification that this alert went off, but if you've got 25 symbols in it, you'll have to go read the alert mail and see which symbol it is. And if you're using a text, you won't even get that. You'll just get that this alert went off. You'll have to go figure out which symbol it was. So that's a reason that we doubled the number, so that you can not have to sort of be as economical with your alerts.
Mm-hmm. Well, real practical use for this. I know a lot of folks, work during the day and they can't keep an eye on the stock market, but really by setting these alerts on key positions, really StockCharts is keeping an eye on these positions for you.
Yeah.
So those of you out there that, run into that problem sometimes, you say, well, I would have gotten out of the stock, but I didn't see it until after, later in the day. This is a way to avoid that. Definitely use these price alerts. And if you got a key level you're watching and you want to make sure that level holds, set a price alert and then have it set up to send you an email.
And I think it's easy now to create them. So I think it will hopefully reinforce good habits. When I go buy something, the first thing I do now is I go in and I put 2 price alerts in. One is sort of a stop, sort of like, okay, if this thing starts sliding, I want to know what it is. And then one's sort of like, okay, where's my next buy position, or any interesting sort of, time you need to sit down and go look at something, whether it's a stop or it's crossing an EMA that you're interested or whatever.
Okay, cool. Yeah, a question just came in right now. Will we be able to add an alert on a trend line? I would think that's would be very difficult to do.
Yeah, trend line is, and we can do alerts on things like, calculated items like, moving averages and whatnot, but a trend line is a little bit, there's a little bit of art form to that. So we can't really calculate what the trend line is, because your trend line may not be Aaron's trend line.
Right.
Oh, yes, I agree.
And just one other question, just to clarify, that all the alerts run about every 45 seconds or so, whether you're extra member or pro, they all run about the same frequency of time.
Okay. That's we did have a question on that, if pro member alerts run more than once a day.
Oh, they run every 45 seconds or so during the entire market hours.
Well,
pro just gets more of them.
Right. They could set more. Okay.
Yeah.
Okay, perfect. Well, I think we have covered just about everything on this particular topic today. I want to thank you, Bill, for coming in and sharing all this information with everybody. It's, it's nice to see it in the Chart Watchers newsletter and maybe to play around with it. But when you have the person who's helping to develop it come in here and explain it, I think everybody would agree that that's very, very helpful and valuable information. So thanks for coming on today.
Sure. No, it's been fun. I haven't done this since we did the old webinars a couple of years ago.
Yeah, we used to do these. For those of you maybe are new to StockCharts or new to these the live shows that we do. Yeah, Bill used to do my show with me. I'm trying to remember. I can't remember. Was it just Trading Places Live? I guess that's what it.
Trading Places Live.
Okay. Yeah, but Bill and I had a great time. We talked before the market started. You're going to have to come back on here, not so much from the developer side, but to go over that breadth. Those breadth charts that you used to.
Charts I used to do. Yeah. I still have them around somewhere. Be interesting to
look. It's very interesting. And everyone who was in the webinar, when you would do those, we got tremendous feedback. So I do think, and you are a trader. I mean, I'd love to have you come in here and talk about some of the things that you're seeing in terms of breadth and what you see going on with the overall market. So
sure.
You don't have to be a stranger. You don't have to come in here just from a technical standpoint. You can come in here and share some of your thoughts on the market as well.
Yeah, no, that'd be great.
Awesome. We'll get it set up.
Now, I know that you're going to stick around just a little longer and check out the chat box. So I know there's still some questions coming in. So.
Yep. Definitely. If you can, monitor that chat box. If you see any questions there, maybe that we didn't see and you want to address, maybe you can just chat back with them.
Okay.
Sound good?
Sounds good.
All right. Really appreciate it. Thanks again, Bill. And again, for everybody out there, this is a new segment that we're starting today. We'll just do it periodically. We don't have a set time frame, but this is everything stock charts. So when you have issues or when we change some features and things around at stock charts, we're going to have Bill and some others at stock charts come on with us and really help to walk everyone through some of these changes. So make sure that you're getting the most out of your membership here at stock charts. So again, thanks, Bill, and we'll hope to have you back real soon.
Thanks. Great talking to you guys.
Mm-hmm.
Okay, Aaron, we got probably about 8 minutes left until we get into the 10 in 10. And I know we wanted to talk a little bit about scooters today. I don't know if you want to maybe...
I've got my screen ready to go.
Okay, go ahead. Take it away.
All right. So before we look at the scooter movers, I thought it would be useful for you to understand what goes into the stock charts technical rank. And one thing that a lot of people aren't aware of is that it really does weight the long and medium term far more than it does the short term. And you can see how the weighting goes. Only 10% of that rank is based on the short term. All of these weightings and the way we come up with these ranks, this was developed with John Murphy. So it really is a top-notch way to look and see how, relatively speaking, your stock or group or ETF is doing versus its universe, as we call it. So ETFs among all ETFs, what is that scooter rank? So here is the calculation. And then I know one of the things that you can do to find the scooters and the reports is right here in the control center. You can find excellent scooter reports right here. And here we are. So, and you can do it by the change in the scooter. You can look at a particular industry, set it up that way to see how the scooters are set up there. So it's very handy. And I don't know if you were looking at some of the big movers so far this day, Tom, but this is definitely a great place to go to get a complete look. And of course, you can always look for the top scooter movers here under scooters on your dashboard. And we can look at the large cap. And of course, here are the others. So you can even do ETFs and see what the top 10 are. And then you can also see which ones are moving the fastest and which ones are suffering the most. So I think it's very handy. And you can see we do have a couple of interesting movers on top here.
Yeah, and I would also point out, if you're not really familiar with the Scooter. And again, that's just an acronym for StockCharts Technical Rank, SCTR. But number one, the fact that it was developed by John Murphy, I think gives us tremendous credibility and value. And so the fact that we've got these weightings, 90% are based on long-term and medium-term time frames, I think, to me anyway, suggests that it's probably much more useful. And feel free to disagree, by the way. For me, it would indicate that it's more useful for a longer term, somebody with a longer term horizon and time frame, and maybe longer term buy and hold kind of mentality. But there are still some really solid uses as a trader. For instance, I know for me, I like to trade. I'm a momentum trader, and I want to trade stocks that are performing well. And the Scooter is one very quick reading. It's a formula, but it's one very quick reading to tell whether or not you're trading a stock that is among the upper quartile. We always talk about 75 up to 100, or if it's in the lower quartile. If it's if it's got a Scooter rank somewhere in the single digits, chances are that chart's not going to look very good unless you turn your monitor upside down.
Exactly.
It's going to be a stock that's been trending lower, probably for a period of time. And those types of stocks, while they may be appealing to some who may be more value investors looking for stocks that are bottoming, I think that it's for me, it tells me that those are probably stocks that I don't want to consider, because I'm trying to ride the momentum to the upside in a bull market. I'm not trying to catch bottoms on stocks that aren't performing well. So it again, it comes down to your own investing style and strategy. But anyway, I just wanted to point that out. I'll go ahead and show one other thing that I think is useful, at least for me, in the way I use the Scooter. If I go in and, well, first let's just pull up anything. But if I go into my chart lists, and I used my strong earnings chart list quite a bit. And I know I'll go ahead and try to address a question that I saw in the chat room earlier as well. But if you click the view all, it brings up all the charts in your list, and then you can view them in different ways. But I like to pull up the summary and notice that the Scooter rank is on here. So of all the stocks that I have, I can click on one button and it tells me the best. Now, most of these are going to be strong Scooters, most of them, because they don't get into this list unless the chart looks pretty good, at least based on my eye.
Mm-hmm.
And they've beaten top line and bottom line estimates. So as you go through, you're going to see a lot of these stocks with Scooter ranks in that top quartile from 75. In fact, I go all the way down to here before I get below 75. So I don't know how many are less than 75, but you can see there's one at 11, a couple in the 20s, but these are not, for the most part, this is not this is more the exception than it is the rule. Most of these stocks are going to be pretty strong. But the question that came in that I saw in the chat room was, I'd mentioned when Greg was talking about energy stocks that I had a few stocks that now are in the energy space. And so I just wanted to, the question was, would I share which ones were in here? I think I had like 6 or 7. 1, 2, 3, 4, 5, 6, 7 of them. But these are the ones. I've got MPC, which I think is Marathon Petroleum, Diamond Offshore, Devon Energy, CXO, Chevron, Newfield, ExxonMobil. So those are the ones that are listed. And you can see they're even ranked by Scooter within the sector. So you can see that the best one is Marathon. I know Newfield had a big day the other day. I'll pull up NFX. But yeah, here's the move on MPC. Now I'd have to wait for a pullback. But that's another way to use the Scooter within a chart list, is simply to pull it up and take a look within sectors or within the entire list. Have it ranked by Scooter, which I think is really important. But here was the breakout on NFX. So you can see a black candle off the uptrend, a reversal. We came down, actually then put in a piercing candle on the 20-day moving average and a breakout. But this stock looks like it's improving, and the volume trends are improving as well. So it looks much better. And that's why it's on this list, because they beat top line, they beat bottom line, and I really like the reaction in and what's taking place on the chart with the volume and price breakouts of late. So anyway, I just wanted to share that. I know we got about another minute or so.
Yeah, I'd have to say that, I agree with you. It is great for your longer term traders. But I want to share the screen just really quickly because I want to show you that it can, I think it's still kind of useful when you're looking in the short term. So for example, let's see, I didn't like this chart so much. Let's go back here. I had a good scooter one in here for you. And I'm going to take which ones are moving the fastest right now. ATVI is the one right now. Okay, so my way to look at it as far as short-term trading. Number one, I like to see scooters in the quote-unquote hot zone. That means that relatively speaking, they're strong. So that gives you a hint right away, that even in the short term, that right now, your trends in the intermediate and long term look good. And of course, you look at your major trends, the minor trends, and then the short term kind of bumps and bruises. And so I think having that is good. And then also when you get these big jumps or moves, that can usually give you an advance warning that you might be getting ready for a good rally. And that could also be considered, I think it's still a short-term trading signal if you wanted to use it that way. So, I mean, that's why I have them on my chart. But anyway, I know we have plenty of 10 and 10 to do, and we can actually start it right on time.
Let's do it.
All right. I'm going to pass it over to you.
All right.
And as we said, our first one is going to be KLDX.
All right. I did not do this one. I didn't cheat today. I'll just get right into it here. KLDX, let me get the annotation tool here. I think we're right down at a pretty key support level. I mean, when you see these stocks double and triple bottom like this, the hope is that you're getting rid of all the sellers and that the volume as we move down is low. And maybe what we see, and again, getting back to what Bruce Frazier had to say when we had him on as a guest, sometimes you get these little false breakdowns and they come right back up. And it's kind of a final sign that the selling has ended. So that might be something I'd look for here on this particular stock. But this is a key area of support. And it does follow a downtrend where we've been sideways consolidating. And many times that is a precursor to another breakdown so that you continue in the direction of the prior trend. So I would be really careful with the stock, but it is at support. If there's one bullish sign here, one thing that I would kind of hang my hat on, it would be that we are sitting right on price support.
All right, excellent. The next one I have for you is AMLP. I just got a PMO buy signal in oversold territory, and the 5-day EMA just crossed about the 20-day, so that gives me a short-term trend model buy. So what do you think of it right now?
Well, I don't like it. So
I love how that happens.
Well, I mean, I do like the fact that the volume is starting to pick up. So the volume trends are definitely turning a little bit. But the problem I have, I think you can see from here, is that each time we get a move up, and you can see here was great volume. We had a big move up, but it came after a big move down. And then it simply consolidates and rolls over to a new low. And then volume's pretty good on this move, and we simply roll over and move to a new low. So I've seen this pattern too many times before. Again, I don't like to trade these stocks that are gaining short-term momentum when they have long-term bearish momentum. So I just don't see enough yet to get me excited and to think that this longer-term downtrend has ended yet. So for me, I would pass on it.
All right, the next one I have, and I think we've looked at this one recently as well, but I'll throw it back out at you, is JD, one of your former Monday setups.
Yeah, actually, we were talking about this one before the show. I really like the stock. I'm still in it. One thing I'm concerned, well, I'm not concerned now with the candle looks. Volume is very heavy today. So, and it's been heavy the last couple of weeks, but it's particularly heavy today. It's already traded over 11 million shares, and we just passed the halfway point of the day. So we're looking for probably 20 million shares or more today. But if we leave a tail above the 50-day moving average, similar to this tail over here, in other words, if we were to close down below, say, 40 or 40.10, something like that, I'm going to take my profits on this one and move to the sidelines. If we break out, you can see that we got a pattern of higher highs and higher lows going in. I don't want to cut my profit short if we're breaking out. So I'm going to watch this level really closely today and that 50-day moving average. And as long as we continue to strengthen today, and we don't close below this line, I mean, you can see this is a pretty big area. This was a reversal that we had back in August. Once we went below it late September, we failed multiple times trying to get through in October. And now here we come trying to get through again. If we do it with heavy volume, I think that's very bullish. But if we fail and leave that tail up there, I would exit. That's just my opinion. Now, we do have earnings coming up, I believe, next week on JD as well. Might be Tuesday or Wednesday. Double check me on that. But if the stock, as long as it keeps moving up into earnings, I'll hold and then sell before the earnings. But we'll have to kind of just watch, see how it finishes today.
All right. Number 4 is Qualcomm. QCOM. Quite a move up a couple days last week, it looks like.
Yeah, this one really got healthy with that move to the upside, but it's just way too overbought. So when I look at a chart like this, if I included it, and I think they came out with better than expected earnings, I believe. And if that's the case with this kind of reaction, I would probably throw it on my chart list, my strong earnings chart list. And this is what, whoops, I don't want to do that. Thought I grabbed the ellipsis here, but yeah, that's what I would highlight. To me, that's the most important thing on the chart. We see the volume coming in to corroborate this move in price action above a key area. I think on any pullback, now I don't know if we're going to come back this far, but I do think that area, which was the reaction high after a huge gap down earlier in 2017, if we were to pull back and maybe hit that level at the same time the 20-day is rising, that would be very bullish. With this kind of volume coming in, we may not get back to that level. We may just simply have to wait for a 20-day test coming up.
All right. Let's see. The next one I have is Alcoa AA. And the question is, should they continue to hold it?
All right. Well, the negative divergence, what I would really like to see is a hammer here right on the 50-day moving average. So anytime I get a negative divergence, and I won't annotate that, but I will annotate this area of recent price support that you can see coming across here over the last 6-7 weeks. So if we were to reverse later today and come back up and hold this level, I think that would be a bullish sign. What I don't like here, what I didn't like, is check out this MACD, 4 consecutive lower MACD readings with 4 consecutive higher price levels. So you've got a negative divergence. I think that's playing out here. One positive is on this selling. It's been very light volume. So I would be looking for a possible reversal. If we get that, I'd feel much better about the stock in the near term.
All right. Let's see. The next one I have, number 6, is CLVS. It's kind of interesting.
All right. Clovis Oncology. Yeah, right now we're getting a breakdown, but this is another one that if we could get a reversal today, it might be interesting. I wouldn't be taking a shot based on this candle right now because we're getting a breakdown. But the 2 levels I see are the recent lows. And look at that hammer that printed right in here, hammered out a pretty nice bottom just above that 65 level. But after this gap up, this has been the reaction low. This is where we have counted on support. And notice where we are now, potentially closing at a fresh new low. If we do, I think your gap support down here at the bottom becomes the next level. So if we break down on the close today and finish where we are or lower with volume picking up, I expect we're going to probably head down to about that 61 level, and then we'll see what happens there. If we do reverse, though, after breaking this level, chances are it's market maker action moving in to buy the stock, because I certainly wouldn't be a buyer from a technical standpoint based on what I see on this chart right now. So if it does recover later today, I think that's a decent sign of maybe some market maker activity.
Okay. The next one I have for you is SSRM. And the question was, could we have gotten some sort of warning that we were going to see this drop, price shock? And, I don't know. I mean, my PMO was already heading lower and was starting to top below the signal line, below the 0 line. So I know I wouldn't have been too excited about it.
I'm not excited about the group. I mean, it's a minor. I'm not a real huge fan of the minors. And obviously the downtrend that it was already on, I'm looking for stocks that are showing momentum to the upside. And this one was for a while, nice gap up, holding, the key moving averages going up. But those big red candles right there certainly are warning something's going on. The volume picked up on this day, and we had a pretty big down day. That was not a good development from a technical perspective. What I would be watching now, though, is this support level, which is right about there. We haven't had it open or a close below about 895, and we're almost sitting on it right now after having gone to as low as 857. So if we continue to strengthen into the close, it could be that we have a short-term bottom in. But if we weaken this afternoon and finish down below this level, I would imagine we're probably going to see more weakness.
Okay. And I know one that was pretty interesting because of earnings recently, Snap.
Yeah, Snap snapped again.
Mm-hmm.
Yeah, earnings came out. Volume is very heavy. This isn't a light volume retracement. It had a little bit of a short-term uptrend going, and this is why I do not hold these stocks into earnings. Stock's down almost 18% today. And the thing is, when it gaps lower, you think, okay, well, I'll just wait until it recovers a little bit. And the next thing you know, you're down another 50 cents, and then another 50 cents, and it really starts to add up. I just don't like taking these kinds of hits unnecessarily. So I'm not a fan of holding into earnings, as most of you probably already know. As far as the key support level, I think where we had good volume and that bullish engulfing candle, that provides support. That's where the buyers came in at the bottom. And so that's what I would be banking on at this point, is that we're going to see some bounce there. But I do agree with Arthur Hill's article that he had in Chart Watchers last weekend, where he talks about, I think it was in Chart Watchers, where he talks about uptrends and downtrends and so forth. And just recognizing that when you're in a downtrend, the most likely outcome is that price support is not going to hold and that you're going to continue to break to the downside. So I'm not trying to suggest that this is the best or that this is going to be a bottom and we're going to go straight back up on Snap. But this is an area where, at least in the short term, you would expect that there will be some buyers that will come in.
Okay, let's see. The next one that I had, let's see, we looked at Snap, ATEN, A10 Networks.
Yep.
Interesting support level here.
Yeah, I kind of like today's candle so far. We did gap up with some nice earnings. I would just say this, the overall downtrend bothers me. So if it doesn't hold on to this gap support, I'd probably take a pretty quick exit. And what I'm looking at is right here. So you can see the top. Anytime I get a gap like this on increasing volume and there's buying throughout the day, I look at the top of gap support as opposed to the bottom of gap support as a key support level. Notice we went just below that level, hit the 50-day, and we bounced back up near the high of the day today. So I think this is encouraging so far. And as long as it holds, I'd be looking for an initial target back up at about that 775, 780 area.
All right. And the last one we have is Red Hat, RHT.
Yeah, I really like Red Hat. This is on my strong earnings list. I think it might be a little overbought from what I recall. Yeah, it's breaking out again, but you can see it's just staying overbought. This is one of those stocks that's just taking off. Is it a good buy or is it a good buy? As far as like just taking back. And so Red Hat, I think, looks pretty good here, breaking out of this sideways consolidation, but it's still overbought. And as much as I like the stock and I love the price action, I just don't like to get in the habit of chasing these stocks without some kind of a more significant pullback. So I love the stock, but I don't love the price to get in. And the problem I have is where you're going to set your stop. If you're not near a support level, you've got to be willing to take a pretty pretty significant loss if this thing starts to reverse to the downside. So you got a trend line that kind of connects right along there. So you've got some pretty good trend line support down around 115. So if the stock would just go through a few weeks where it would, just slow down a little bit, consolidate, maybe we could get it on this trend line.
And that concludes the 10 and 10 to 1. We did all right. Got a little bit into the market update, but not too much.
Yeah, not too bad.
Yeah. All right. Well, I guess I'll go ahead and take the screen and we'll get started with our final market update. Some very interesting activity on our candle glance right now. I'm going to just refresh. And here we go. Remember, we were trading below, we were down pretty much the majority of the day, but we can see that we've now gotten back to the positive on the major indexes. NASDAQ is really starting to take off here, as well as the S&P since about the noon hour, since we've been on air. And the Russell 2000 is trying to make a comeback as well. Still, it's just barely above that close from yesterday, so it is in the positive, but not quite a good gain just yet. Wilshire 5000 also making a nice rally move. Treasury yields are up now to 23.25. UUP, the dollar's trading mostly unchanged at this point. And look at commodities, took a dive. If you recall, at our last candle glance appearance on the market update, we had just gotten this big candle back here. Now, we had that move to the upside, and now it is just crashing down. Gold, a gap up and then moving sideways. VIX is falling, and we're now looking at readings of 970. So serious complacency out there. Advances are now leading declines. I just wanted to take you very quickly to my gold chart, since we were looking at that interesting candle glance there. Here we go. And I have been a bear for quite a while since we started this downtrend. I've been expecting it, honestly, to break down from this area of support and move all the way down to the 1200 level. Well, I have to say, clearly, I haven't been correct. And we can see that the PMO is now trying to make a move toward its signal line to give us a buy signal on gold. We can also see that we're getting a nice move on that scooter. And I was noticing also, as far as our discounts are concerned, we're pulling back the discount rate. So that is a bullish setup as well. So now I would have to say, if the PMO can make that move, make that buy signal, I would look for gold to at least come up and test that 1300 level. And that's all I have for our final market update.
All right. Well, I know, we wanted to go into and do a what would you do?
Indeed.
And so which stock did we pick? I'm going to go ahead and pull this.
VFS, I think. No, VFC. So I think some of our folks have had a chance to look at that. We did mention at the beginning, but we can give them a little more time if you'd like.
Yeah, we'll give them some time. I know that there were a couple questions that came in, a couple of questions that I think were addressed to me. I'm trying to look to see now where I saw it.
Market maker activity.
Yes, that's what it was. So the question was, can I discuss a little bit about market maker activity? So I'm going to leave my screen up, and if you have comments on VFC, what would you do? That's the title of this segment. So if you were getting ready to place a trade on this stock, or maybe you wouldn't place a trade, maybe you don't see a trade. But what would you do? Would you be a buyer? Would you be a seller? What bothers you? What do you like? Technically, do you see something that really stands out? Whatever it is you see when you look at this chart, go ahead and type it in. And Aaron, if you want to kind of keep an eye on the window for any comments. What I would do is, when you're typing in your comments, because we're getting comments on a lot of different things, maybe just type in VFC hyphen and then whatever your comments are, so that we can quickly see that you're responding to this particular stock. But getting back to that market maker activity, and I've never worked for a market maker, so I'm not trying to tell you that this is how they work or they don't work. But what makes sense to me, I do know that some of the big firms like Goldman Sachs has a market making unit. And what market makers do in general is they provide liquidity. That's their number one role in the market. So if you want to buy a stock and there's not a willing seller on the other side, you put a market order in, but nobody's ready to sell, market makers will short. They'll borrow shares and they will short against your position. So they provide the liquidity so that you can place trades. And where that really comes in handy is on stocks that are not as liquid. If you're trying to get into Intel or Microsoft or Apple or some of these stocks, you've always got buyers and sellers, and there's a constant, movement back and forth based on demand and supply. But some of the other stocks, maybe that don't move nearly as much or don't have nearly the volume, there's a lot more market maker activity. So a lot more of the trading volume involves market makers. And so you can get a lot of manipulation back and forth. And, I talked about this a little bit when I did the reversing candlesticks segment. And I talked about it a little bit earlier in the show, where I saw a breakdown. And technically, as a technician, when you see a breakdown, are you a buyer? I'm not. I don't want to see a stock that's breaking down and go long. So a lot of times these market makers, they have clients who, are these big pension funds and so forth. And so if they want to buy 1 million shares of a stock, you and I can go and you can get our 100 shares or 1,000 shares or whatever. It's no big deal. But when some of these other funds, pension funds and so forth, want to buy a big position, again, I've not worked at a market maker or market making unit, so I don't know this as a fact. But what makes sense to me is that these market makers are going to try and get the best price possible for their customers. And part of that, I believe, is that when you get these breakdowns, and you can almost guarantee that you're going to see a bunch of sellers out there, because if you and I can see a clear support level, believe me, everyone who owns the stock probably and trades technically can see that support level as well. And so if a stock starts to break down, the volume starts picking up, you're going to see stops being triggered, and the selling is just going to increase. And at some point during the day, if you get a big reversal and you come back up and you hold that support level, you have to sit back and ask, who's buying this stock? Who would be buying on a big breakdown on heavy volume? Well, it could be these market makers that are buying the shares for a client of theirs, a pension fund. And so they need that heavy volume, and they need these lower prices to get a great price for their client. I mean, think about it. The stock goes down, let's say a 70 is a key support level, and intraday goes to 67, and then comes back up and reverses and finishes at 70 or 71. And the clients are starting to fill their shares or their positions in the 60s. They're going to be pretty happy with that market maker that they were able to do so. So that's why reversing candlesticks as a short-term trader are so important to me. And I'm going to talk to Greg Morris when he comes on here next Wednesday as a guest, because I know he's written he's written a book about candlesticks. And I'm going to get his thoughts on that as well, to see why he thinks that these candlesticks work as well as they do. But for me, a lot of it is the visualization of what's taking place many times at that market maker level. So I don't know. Do we have some comments on this chart, Aaron?
Oh, sure we do. Of course. Looks like the majority of people are positive on this. Lighter trading above the 20-day moving average, buy short and cover at the 50-day, high volume pull, flag possibly. Looks pretty good. They were saying you could have purchased it earlier in the day, actually. Light volume, MACD crossover, caution. Look for further testing. So quite a bit there, but mostly it seems positive.
Yeah, when I look at this chart, and I actually thought about buying this one yesterday, and I didn't do it, and I'm kicking myself today. But I thought I might get the gap support test. So I'm going to annotate a couple areas that I like on this chart. Now, I know, those who follow the MACD, and I know, Aaron, you follow the PMO, you're getting these crossovers. I see this a lot, though, with an uptrending stock when it just consolidates and pulls back to key support levels. You get those temporary moves to the downside. To me, it doesn't mean that you necessarily should sell or short because of these, especially when the crossover is taking place above the center line, because to me, you're still in a positive stock and we're in a bull market. So I'm not a fan of shorting anything right now, period. But I definitely wouldn't, that's not the kind of technical signal I would be looking at in order to short. The key levels for me on a stock, and I talked about trading gaps a couple weeks ago, and I love to trade gaps. It encompasses probably, I don't know, I've guessed before, but maybe 80% of my trades probably have to do with trading gaps of some sort. But here's the top of gap support. Look at the volume that came in. It was one of the heaviest volume days of 2017. It gaps up and continues moving up throughout most of the day and closes much higher than the open. So to me, this is a very bullish development because, again, when everybody wants to buy, market makers are on the other side of that trade. They provide the liquidity on the sell side and on the buy side, depending on which way the action is taking place that day. So a lot of times you get gap fills. And what a gap fill is you gap up and you go back and you test that prior day's close. So when you get a gap up like this and it keeps going higher on heavy volume, to me, it's just telling me that the demand is so great on this stock that it's probably not going to fill that gap. Normally, when you get a candle like this and you pull back and you test the upper part of this candle like this, the upper part of the gap, or this upper level right here, that's normally where I look for a reversing candle. Now, what I would prefer is to see this stock trade down below 68 intraday, like it's breaking down, and have a little surge in volume and then reverse and come back up and hold 68. And I'll give you a perfect example of this on a different chart. And I'll come back to this VFC in 1 second. But during the 10 and 10, this is a stock I own, and JD did this. So you can see this gap support. Look at the volume, look at this gap. And the first time that it came down and hit the top of this gap, notice what happened. It quickly went right back up and tested the price resistance level. So here was a false breakdown. It looked like intraday we were losing the top of gap support. We were losing the 50-day moving average. Who in their right mind would buy this stock? Well, maybe market makers that are expecting the stock to go higher and trying to get a good price for their clients. So here we got the reversal, and sure enough, a little more than a week later, we were right back up near resistance. Great trade. Now, this last hammer that printed off this downtrend actually filled the gap. This is one that actually came right down and tested this level at about $36 before reversing, and now we're getting this move to the upside. So when I look at something like VFC, that's what I'm hoping to find. I want to see these reversing candles, and that's the main reason why I didn't buy this stock yesterday, is I thought maybe I could get it on a reversing candle just to give me a better feel that it had in fact bottomed in the short term. So I think there are a lot of good things here. I do understand that some, look at these crossovers as bearish triggers. I don't look at them that way. As I've said before, for me, the most important thing when I'm trading is price volume. And not everyone agrees with me with that, and that's fine. Everybody trades differently. But that's the most important thing. So when I see the gap up, I look at this as being really big support. Top of gap support, bottom of gap support, the rising 20-day moving average, all of those are areas that I'd be looking for reversing candles.
Yeah, sounds good. Of course, I do disagree with you to some degree as far as what I agree with all of your points, but I have to disagree with the buy, and mainly because I do try and follow my own rules. So sometimes they look really good and sometimes not as much. So let me see. I got to share the right picture here. Oh, somebody was asking about the gold premiums and discounts that I cover on my gold chart. Carl did an excellent article on January 23rd of 2016. So if you want to go into the DP blog, very simple right there. And then you can hit archives, go to January 2016, and there we go. And you should find it if you scroll down, etc. So that's a great place to look for it. So here's my chart of VFC. And while I think, the Scooter's telling you long term, this is still a really strong stock, and especially with among its peers. But for me, when I do trading, I cannot buy something that just got an overbought sell signal on the PMO. And that's, like I said, it's one of my trading rules, so I certainly wouldn't buy. I also don't like the look of this possible descending triangle, which could very well break to the downside. But I think you have a great point. It's holding that 20-day EMA. That's really, gap support tends to be pretty strong. So even if we got that breakdown out of that descending triangle, there's still the bottom of this gap support. So I think there's still some opportunity to really see what it's going to do. But I think this is a big problem. It's a very clean crossover to the downside on the PMO. It just came in, and of course OBV volume is sort of trickling down. So I'm not a fan of that. So for me personally, I would not trade this, mainly because my trading rules would kick me out of it. So,
well, a couple comments. First, I have no problem with you disagreeing and not, and looking at this as maybe a bearish type pattern, or maybe just a topping pattern for a period of time, because that's what makes a market. I mean, if everybody did the same thing based on looking at the charts, we'd either be going up really fast or we'd be going down really. Right. So, that's what makes a market, being on both sides. So I appreciate the comments. One comment I saw in the chat room, which I thought was an excellent point, and I did not pull it up and I didn't look at it. Pull up the weekly chart, because apparently VFC is hitting resistance.
Oh, yeah, I did see that in the comments. I did want to mention, somebody asked me, why isn't this a flag? I think when it first busted up here and started coming down, that I think you could have called a flag. But the minute we started to continue to see it break down, this is kind of a long flag, in my opinion. So I wouldn't call it that. It's also in a downtrend the whole way. You want to see that breakout happen a bit sooner. The pattern, I think, is just a little too mature to call it a flag formation, but that's my opinion for sure.
I would call it a flag. So
yeah. See, well, you're bullish on it too. So, it's a matter of, the way you see it or consider it. But yeah, I mean, typically with this kind of a flagpole, I wouldn't want to see a flag that's almost the same in length as the flagpole as far as it going. But that's just, you can, again, especially with chart patterns, and I will be talking about these on Friday, they are kind of in the eye of the beholder, because sometimes you can get multiple chart patterns out of one chart. So, and that's why that question came in. Well, why isn't it a flag? So I'll address some of that stuff, as far as textbook rules go, and then you can make your decisions. But yeah, here is the weekly chart for VFC. And yeah, we're looking at some pretty serious overhead resistance here at those all-time highs. But in the longer term picture, notice my PMO is on a buy signal and it is still heading up. It's not really overbought yet. So as a longer term investment, I think this could be a possibility, but I would certainly wait to see if that resistance level holds or not.
Awesome.
Yeah. So we'll have to see. But yeah, that's one reason, the good idea to look at weekly PMOs and even the monthly ones. Let me see. I got a monthly chart here just for grins. And look, see, on the longer term monthly chart, we just got a PMO buy signal. So in oversold territory above the zero line, so near term oversold. So again, it's a longer term or intermediate term investment. It does hold some promise, but I think I agree that overhead resistance at all-time highs is going to be the make or break for this. No pun intended.
Yeah, great comments, though. I mean, I was just reading through all the comments, and it's interesting. Some agree with you, some agree with me.
Yeah.
And that's what makes a market. So it'll be interesting to see how this one plays out. Maybe we can revisit it at some point, maybe in a week or two.
I mean, they call it technical analysis, but honestly, it's an art. I mean, there is obviously a lot of math involved in that sort of thing, but I think analysis, especially with technical analysis, there are a lot of ways to look at these things. And so it is kind of an art to figure out your trading strategy, what works, how you determine a pattern, and all of that. So hopefully we're helping all of you out there to see charts maybe in a different way than you normally do. But again, I don't think there's a right or wrong.
Right.
Just information.
All right. Well, we got about, 6-7 minutes left in the show. And I thought maybe what we could do is revisit some questions, some commonly asked questions of both of us, because we are on here a lot. Folks are kind of wondering, maybe some new folks are in here. And so maybe we can address a couple of those questions. I thought the first one that maybe you could address is, you talk a lot about your PMO scan. And is there a way that maybe you can just check to see or point everybody in the direction?
Absolutely. We do get a lot of requests for this. I've now asked for it to go into the predefined scans, if at all possible. I do want to make sure I completely tweak it to the right way. But if you go to our Market Watchers Live blog, since we have had so many people ask about it, at the very bottom of the blog articles, and I'm just going to scroll quickly, so close your eyes. And at the very bottom, I now have put in helpful Market Watchers Live links. And so I have a link to the Facebook, our YouTube channel, and there is my PMO scan, Tom's blog, my blog. et cetera, the common indicators that we do use. So you can just click here and that'll take you right to my latest scan article. This is the one I use for Monday setups. And you can just take this and just copy and paste it into, look at how tricky this is. Go to our home page. And you can, if you are an extra member or above and can get to the advanced scanning workbench, you can just say new scan. And I just click all and paste that in, and voila. You can check the syntax and you can save it if it works. So at this point in time, my syntax is correct, and then you can run the scan. So that's one way to get to it and use it for yourself. And of course, you can tweak it. And here's what Bill was talking about, putting in these text, reminders of what each thing means. It's not quite as pronounced here with mine, but although this one, you've got a lot of syntax and language. So that's how I get to the scans, and you can find mine.
Okay, awesome. I'm going to go ahead and share a scan as well, because I know there was a question in the chat room, I believe it was yesterday, asking me about the scan that I use for high volume early in the trading day. So I'm going to go ahead and just share that, because I do go through, and sometimes I'll find some stocks that I initiate positions based on this. But if you're in the workbench, essentially what I'm trying to do, and you can take a look at this and come back and review it later and use it if you'd like. But one of the things that I do is I like to take a look in the first, say, 30 minutes of trading action, which stocks on my strong earnings chart list are showing heavy volume in early trading. Just take a look at the chart. It may be that we had a big sell-off and it hit support and it's reversing, and so we're getting a lot of volume because of that. It may be breaking out, or it might be something else. Maybe there's a news item or something that came out on the stock. But what I try to do is to there are actually two scans that I use. One is the RSI 40 to 45, and that's what this one is. I actually meant to pull the other one up, but let me pull up the high volume. The 10 a.m. high volume scan is what I call it. And let me put this in the advanced scan workbench so you can see how you would type this in. But this is the one that's the high volume that I enjoy using. And so I apply this to my strong earnings chart list, because you can apply scans to a chart list as opposed to just running it against all the stocks that are out there. And so if I go back, actually, I think I changed it in here. Yeah, let me just pull it up here. So I can go in, instead of saying all U.S. stocks, put in their strong earnings chart list. And I think if I click, it'll take over. No, it's still showing. Never mind. Let me just run it from this particular scan. So let me run the scan. So what I'm looking for in this chart, now all of my stocks in this list are going to come up, because at 10 a.m., I'm looking for any stock that is traded at least 40% of its average volume over the past 90 days. So if a stock, for instance, normally trades 1 million shares and it's already traded 400,000 in the first 30 minutes of trading, or whenever I run the scan, then it's going to come up. Well, we're well into the afternoon, so a lot of the stocks on this list have already hit the 40%. But let me just go ahead and run this, and you'll kind of see. And then you can take this, you can drop it, you can replace an existing chart list. I have a scan results folder that I usually use. And so obviously it's showing me 74 stocks right now, which is about half of my list have traded this many. But then I can go through and I can see what's been moving, what's up, also what's down, because the ones that are down probably are more appealing to me, so long as they're not breaking down. So I might look at something like Oshkosh and see what this chart looks like. It's got a negative divergence, maybe on its way to a 50-day test. But when I do this early in the morning, it gives me an idea of the stocks that are showing volume and also potentially hitting key price levels, either support to the downside or possibly breaking out to the upside. So anyhow, I know that question comes up sometimes, the different scans that I run against my list, so I thought I would use it. So we are now just a minute away, and take a look at the market here, you can see that the Dow has actually now turned positive, as have the NASDAQ and the S&P 500 and the Russell 2000, which was down earlier, trying to actually get back into positive territory as well. So pretty nice recovery. I'll be looking to see whether or not this continues into the close, but anything in particular you're watching as we wrap up today?
Well, since I just got that PMO sell signal on the S&P 500, I'm going to be watching the PMO. We're seeing some really thin margins on the DP scoreboard indexes, the Dow, S&P 100, 500, and NASDAQ 100. And currently, that was the first PMO sell signal we got. Margins really thin, so it could turn back up if we get a high, if we can get up the market up a little bit more. But I'm looking at the Dow chart, and we're really close to a PMO sell on that one, and the S&P 100 as well. So I'll be watching those PMOs on those major indexes closely. And of course, if I get any changes on those signals, I do post that in the Decision Point blog. I usually do a DP bulletin, and you can see those changes or any important signal changes for the day.
Awesome. All right. I want to thank everybody for tuning in today. A couple of announcements if you weren't here earlier in the show. First, also, I want to thank Bill Shelby for coming on. We did initiate a new segment, Everything Stock Charts, on here, and Bill was kind enough to come on board and help to illustrate for everyone the way the new price alerts work. So if you came in late, you missed Bill's talk earlier in the show, I think you would want to go back and review the recording of the show. Bill spent probably about 30 minutes with us and really gave us an in-depth look into the price alerts and how you can use them in your trading. So again, thanks to Bill for that. Also want to mention that Greg Schnell will be coming back next Thursday. Everybody enjoys having Greg on the show. He provided some great insight on energy and into that energy group yesterday, and he's going to be talking about point and figure next Thursday. And I'm sure we'll give us an update on the energy as well. We'll force him to. Next Wednesday, Greg Morris will be joining us, a long-time technical analyst. He's been watching the market for 40 years, written books. I think you're going to find some of his talk very, very interesting. So mark your calendar for next Wednesday and Greg Morris. And then, of course, our very own Aaron Swinland will be providing you a segment on Friday dealing with chart patterns and some of the things that you should be looking for as you go through your trading day and looking at different charts and so forth. So that'll be really interesting as well. So definitely stay tuned and be here on Friday for that. I think that'll be really an educational segment. Thanks again, everybody, for joining us. Please complete the survey as you exit the show. I really would like to hear what you thought of having Bill Shelby on the show and the Everything Stock Charts. Let us know what you thought about that segment and including that in future shows. We love getting this feedback, and it does impact how we set up these shows in the future. So make your voice heard and just take a minute or two and fill out that survey. We'd really appreciate it. As a reminder, Market Watchers Live now airs Monday through Fridays, 5 days a week. Let's not go 7.
No, don't give them any ideas.
But it airs from noon to 1:30 p.m. Eastern Standard Time every day, Monday through Friday. And so we really look forward to continuing to provide these shows for you. Have a great Wednesday afternoon, everyone. We will be back tomorrow on Thursday. Happy trading.